Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video, I'm going to look at a company that I own in this portfolio. Is one of my favorite companies. It's been in this portfolio since since I started. Maybe I bought it maybe after a couple of months of starting this portfolio. It's been in this portfolio. It's in the green. I will give you the full details about this company, what they do, and then give you the financials and so on, and then I'll tell you exactly what I would be doing moving forward, inshallah. But before we do that, as always, just press that like button, subscribe to the channel if you haven't already. It genuinely helps, helps me and helps the community to reach out more people, inshallah. There's over 50% of you guys that are watching the videos but not subscribed yet. I would genuinely appreciate if you could do that first, and then join us in the Patreon account where you get access to the family portfolio, my own buys and sells, weekly buys and sells, the dividend calendar spreadsheets, the stock watch list, you name it. You got plenty of things you can get your hands on, and inshallah, of course, it helps the channel grow, and of course it will help me pay all the subscription things that we use on daily basis, inshallah. But if you can't do any of that, just like the video, subscribe, and share with your family and friends, inshallah. The company we're going to talk about today is called Air Product and Chemicals. This is one of the companies, like I said, that has been in my portfolio for a very, very long time. Basically, having looked at the ratings from Seek and Alpha, you can see Seek and Alpha, Wall Street, or Quant are all saying it is a buy right now. And we want to check the financials first before we do that. So the company is one of those companies not many people are aware of. Okay, so they provide different types of gases. They process specialty gases, equipment, and related services in America and so around the world. This is one of those companies that you see their trucks or their driving around in different cities. When I did Hajj or Umrah, I can't remember, a long time ago, I saw it's basically their trucks in Saudi Arabia, and I was like, that's actually one of the companies that I own in my portfolio, and these are all the types of gases they deal with. Now, just to kind of give you an overview, they have basically $12.6 billion of sales with a strong existing business delivering double-digit EPS growth since 2014. They have 40 plus consecutive years of dividend growth, which is absolutely huge, and I'll show you exactly a bit more about that in a second. $60 billion in market cap right now, the number one hydrogen supply in the world right now. $15 billion capital commitment by 2027 for low carbon hydrogen project to address the energy transition, as well as the 50 countries where they operate, which is absolutely amazing. And I like this, the fact that it's very diversified. 1,800 miles of industrial gas pipeline, as well as 750 plus production facilities, and 30 plus industries served, which is quite good. So based on this, it tells me it's a very well diversified business, and there's a lot more information on their website you can get your hands on. And some of the projects that this is their reason, basically the report that they've actually generated, and you can get a little bit more information about what the company is doing. But this is, for me, one of the most important part: the world-scale clean energy project, including NEOM. NEOM is the Saudi Arabia project, and they are the main company. They actually partnered with Air Product and Chemicals. And I think they've got a long-term contract with Saudi Arabia, which will basically be very beneficial for this company. They've also got the Louisiana Clean Energy Complex that's also taken place, and the Net Zero Hydrogen Energy Complex in Canada as well. So they got quite a few projects on the pipeline. And for that reason, I really like the company, and this is their latest report. And I think they missed, I can't remember if they have, in fact, let me just double check. I think they missed one of them. There we go. They missed the revenue just by 50 million. So it wasn't actually, it was down by 1%, less than about over 1% year over year. But other than that, everything else was absolutely fine. Now, what I want to do now is go over the financials again and just see if this company is actually a buy right now or if it's hold or whatever. So Air Product is supposed to for rapid growth due to business opportunities in basically that drives its ambition. $30 billion capital allocation plan, which we've already seen. And yeah, this is one of the companies I've had in my portfolio for quite some time, and I'll tell you exactly at the end of the video what I will be doing with the company, inshallah. Now, as you can see here right now, 274 current stock price, EPS is by over 11, and 61 billion market cap right now. It has a wide economic mode, and beta is quite low. I like the fact that the beta is not that basically over 2, which is nice. 1. Current PE 23, the forward PE is 22, and the 5-year average is 27. So based on PE right now, it tells me it's actually slightly cheap. In comparison to the sector, it's basically slightly higher than the sector, but based on the 5-year average, it is low, as you can see there. And the free cash flow, based on free cash flow, is about 27. Now, dividend yield right now is 2.56. You get $7.04 for every share of this company that you own. Payout ratio, not too huge, okay? Anything about 61, I'll be worried, but right now it's okay, okay? Anything about 60 and above, I would be a bit worried. But so far it's fine. Latest increase just to 1%. The 5-year growth rate about 10%, so double digit in the last 5 years, which is quite nice. 41 years of increase in that dividend, 95% safety, which is really good. Now, this is my main concern for this company, and that's the free cash flow. The free cash flow has been a negative for, I think, about a year and a bit now, but the company has if you listen to their recent call about the earnings report, you will actually see that they've actually actively working on basically increasing that free cash flow in the next few years. So yeah, we'll see what basically how that plans out. And the free cash flow CAGR for the last 5 years, of course, because we are negative now, we are on a 0. Free cash flow yield -4%, and free cash flow margin of -21%. So in terms of free cash flow, that's a little bit concerning right now, but I do think this company would be okay considering the amount of cash that they're generating. So sooner or later, hopefully this will turn into a positive. Okay, that's the main concern for me. Absolutely the main concern. And I've said this before. Profit margin right now about 21%. Operating margin is 23%. Return on equity of 17%, and return on invested capital of 9%, which is absolutely fine. Net income of the compound annual growth rate of the last 5 years, we're looking about almost 9%. Total return in the last 10 years about 10%, and revenue growth in the last 5 years we're looking about 6% CAGR, and EPS CAGR we're also looking at 7%. Current ratio about above 1, which is good, so they have enough liquid assets to cover their liabilities. Hence why I'm not too worried about basically the free cash flow, because they do have enough liquid assets that they can actually liquidate if they need to. Current, in terms of the growth estimate for the next year, is about 8%. Growth estimate for the next 5 years, we're looking about 5%. So 5% per annum, that's what they're expecting to grow. Right now, the current price we've seen 274. According to Morningstar, we're saying it's a fairly value right now, $309 per share right now. That's what they're expecting. According to Simply Wall Street, in fact, it's 71% undervalued. They expect the price to be 971. They've always been bullish on this company. I'm not sure why. I'm not sure what they're using. But target price from Tape Rank for the next 12 months is almost identical to what we have for Morningstar, and as you can see here, that's about 10% upside from where we are. Up basically is a moderate buy, an average price target 298 from Seeking Alpha, 9% upside. Basically it's a buy rating from them as well. Now as soon as you can see here, when it comes to Sharia compliance side of things, we're looking about 100% in terms of business activity, 27% when it comes to interest-bearing debt, and interest-bearing securities just about 5, just closer to 5%. Now, shares outstanding has, of course, a little bit decline here and there, but it's been increasing. So they increased. In fact, it has been increasing more or less every 3 years, and I think this is the reason why this company has done quite a few acquisitions for the last few years. So they bought a couple of other companies. That's probably how they financed it, and that's probably why this has increased. But it has stayed the same for the last 4 years, so they haven't bought back any of their shares. What are they going to use? They don't even have a free cash flow right now, so that's probably one of the reasons why they haven't bought any of their shares back. Now, in terms of growth side of it, let's quickly have a look at the let's go to earnings side of things. Expectations, so 7%, 8%, and 19% in 2027. and negative right this year, but the 8%, 6%, 8%, 21% in 2027 again, and then 12% and so on. So nothing to worry about basically moving forward in terms of that. And if we compare this with the S&P 500 and we compare it with the Lind, because they are very in a basically same sector, last 5 years you can see here, and we're looking at total returns here, that's about 40%, the S&P 500 about 90%, and 170% when it comes to Lind, which is absolutely amazing. So it outperformed both of them. When you look at the last 10 years, 184%, 180%, so it has overperformed basically the S&P 500, but Lind has actually done absolutely amazing, 324 as well. And in terms of revenue side of it, from 2024 to 2014, sorry, it was about $10 billion. It was a bit of a decline, about 7, and then it bounced back since then. It's been increasing. Right now we're about on 12. The cost of that operation is about $8 billion, $8.2 billion of that. So there's about $4 billion they've taken away as a gross profit, of course, and then they have to pay all these taxes and all of these things. And their net income right now, as you can see, over the last couple of years, it has been increasing, so from $2 billion to 2.2 to 2.3 to 2.5, which is really good. So hopefully that will transform into some sort of a free cash in the next couple of years, and that will be absolutely amazing for the company. As you can see here, I have £5,223 invested in this company, or 25 shares. I am up 7.5% to all $366 per share. Now, like I said, my main concern is the free cash flow. It's been for the last couple of years. It has been slightly changed over the last couple of years for the better, so I'm going to hold on to it. And the fact that I'm not worried about the dividend, it is basically one of those companies that has, in fact, it was up almost to, I don't know, 12-13% not long ago, but it has come down a little bit. I'm going to hold on to it, maybe for one more year. If the free cash flow does not increase, and of course then I'm going to sell it and basically find another company. Hopefully that will be, better than basically in terms of performance moving forward, because not having a free cash flow, that's one of the rules I have, is I like to buy companies that have a excellent free cash flow, but this one has let me down. It is the only company in here that I have in this portfolio that does not have excellent free cash flow. So I'm gonna wait, inshallah, be patient for one more year, because I really like the company. I like the business model. I like the beta is quite low. I like the dividend side of it, safe as well. But for now, okay, so that can easily change. So if I don't see any improvement in terms of free cash flow in the next maybe couple of quarters, I'll keep an eye on it. By maybe 2025, the beginning of 2025, if I don't see any major change, I'll probably sell it. But that's the only concern. But the management have absolutely made it clear a few times that they are working, making sure that that net income translates into more free cash flow, so they can basically acquire other businesses, pay off any debt that they have, increase that dividend rather than increasing about 1%, which is basically something they haven't done in a while. They used to increase it way more than that. Now they just increasing by 1%, which then means they just want to keep that status of dividend aristocrat. So inshallah, we'll see what happens, but that's my honest opinion of this company. If you like this type of content, please subscribe to the channel. Let me know what you think about this company, if you own and so on, and also join us the Patreon account, where it costs you 15p per day, and you get a lot of things out of it, inshallah. Have a wonderful day. Assalamu Alaikum.